This is your brand and here is your brand updates. But first, the headlines. Aliko Dangote plans 5 to 10% stake sale to attract investors into Africa's largest refinery. Coca-Cola HBC to acquire 75% of Coca-Cola Beverages Africa in $2.6 billion deal. Fintech startup Lidya shuts down after 9 years, citing severe financial distress. Guinness Nigeria bounces back, posting 15.8 billion naira profit in Q3 2025. I am Iwalola Tolu Anyodibu, and now the major updates. Aliko Dangote has announced plans to sell 5% to 10% of his stake in the Dangote oil refinery to attract more investors and strengthen the company's capital base. Speaking with S&P Global, Dangote said the partial listing would mirror the structure of Dangote Sugar and Dangote Cement, noting that his group aims to retain no more than 65 to 70% ownership. He also revealed plans to expand refining capacity to 1.4 million barrels per day, potentially doubling output. The $20 billion refinery located in Lagos currently refines 650,000 barrels per day and is the largest in Africa. Dangote hinted at possible talks to increase his stake in NNPC Limited, which recently reduced its shareholding to 7.2%. Despite logistical and regulatory challenges, the refinery is expected to make Nigeria self-sufficient in refined petroleum products and create thousands of jobs once fully operational. Coca-Cola Company is set to record a $1 billion impairment charge in the fourth quarter of 2025 as it prepares to sell part of its stake in Coca-Cola Beverages Africa, CCBA. The move follows Coca-Cola HBC's $2.6 billion deal to acquire a 75% stake in CCBA, including Coca-Cola's 42% share and that of Gotchi Family Investments, valuing the bottler at about $3.4 billion. Once completed in late 2026, the transaction will make Coca-Cola HBC the world's second largest Coca-Cola bottler and strengthen its presence in 14 African markets. HBC plans secondary listing on the Johannesburg Stock Exchange to emphasize its long-term commitment to Africa, with an option to buy Coca-Cola's remaining 25% stake within 6 years. CEOs of top Nigerian fintechs, including Flutterwave and Paga, have hailed Nigeria's removal from the FATF grey list, describing it as a major boost for the country's financial credibility and investment outlook. The Financial Action Task Force (FATF) announced on Friday that Nigeria, alongside South Africa, Burkina Faso, and Mozambique, had been delisted following significant reforms to combat money laundering and terrorist financing. The move ends nearly 3 years of increased scrutiny and signals renewed confidence in Nigeria's financial governance. Flutterwave CEO Olugbenga Agbola said the delisting will lower cross-border costs and restore investor trust, while Paga CEO Tayo Oviosu noted it will attract more foreign direct investments. Government officials and stakeholders also celebrate the milestone, calling it proof of Nigeria's strengthened financial systems and a key step towards sustained economic growth. Pathway Advisors Limited (PAL) has been named Best Issuing House and Financial Advisory Firm of the Year at the 2025 Business Day Banking and Other Financial Institutions BAFI Awards. The award, presented at the Lagos Intercontinental Hotel, recognizes PAL's excellence in delivering innovative and client-focused financial advisory and capital market solutions. Receiving the award, founder and CEO Adekunle Alade said the recognition affirms PAL's credibility and commitment to ethical financial practices, noting the firm has raised over 300 billion naira through commercial papers and corporate bonds across multiple sectors. Co-founder Dolapo Akambi Alade dedicated the award to the PAL team, applauding their dedication and excellence in advancing Nigeria's investment banking space. Nigerian digital lender Lidya has officially shut down operations after 9 years, citing severe financial distress. Founded in 2016 by Tunde Kehinde and Erkin Exin, Lidya was among Nigeria's early fintech pioneers, offering fast collateral-free loans to small businesses. At its peak, the company disbursed over $150 million in loans across multiple markets and raised $16.5 million in funding. However, internal crisis, executive exits, and unpaid staff crippled operations. In its shutdown notice, Lidya confirmed it can no longer process refunds or settle claims, marking the end of one of Nigeria's most notable early fintech startups. Ntel appoints new board ahead of January 2026 commercial relaunch. Natcom Development and Investments Limited, Ntel, the company that acquired Ntel, has appointed a new board of directors as it prepares for a commercial relaunch in January 2026. The board, chaired by General T.Y. Danjuma, includes Adeleke Alex Adedipe, Ayodeji Joshua Richards, Mariam Mutalab, Olaide Aremu, and Soji Maurice Dia, who will serve as managing directors and CEO. The overhaul is part of Ntel's turnaround strategy aimed at stabilizing cash flow, monetizing assets, and re-establishing its presence in Nigeria's telecom sector. Ahead of its relaunch, Ntel is monetizing its nationwide telecom and real estate assets and exploring a fixed wireless home service as a potential market re-entry. The board said the transition marks a defining moment in Ntel's recovery journey and reaffirmed its commitment to building an investor-friendly, sustainable telecom enterprise. FirstBank, West Africa's premier bank and a leading in financial inclusion, has integrated the Pan-African Payment and Settlement System (PAPSS) into its Lit app, enabling customers to make instant, secure, and local currency-based cross-border payments across Africa. Developed by Afrexim Bank, in collaboration with the African Union and the AFCFTA Secretariat, PAPSS facilitates low-cost, real-time transactions between African countries. According to Chuma Ezerim, Group Executive, E-Business and Retail Products at FirstBank, the integration reflects the bank's commitment to innovation and seamless cross-border payment solutions that support financial inclusion and SME growth. PAPSS CEO Mike Ogbalu said the partnership connects ambitions and bridge dreams across borders, making African trade and remittances faster and more accessible. With PAPSS now active, the Lit app expands beyond local digital banking, empowering individuals and businesses to transact across Africa in Naira without foreign currency conversions, advancing the goals of the AFCFTA and reinforcing FirstBank's leadership in digital banking innovation. Nigeria's leading brewer, Nigerian Breweries PLC, has reported a strong performance for the first 9 months of 2025, posting 703 billion naira. According to the company's results filed on the NGX, cost of sales rose up to 627 billion naira, while marketing, distribution, and administrative expenses climbed by 38% to 254 billion naira, reflecting the brewer's intensified push on brand promotion and sales. Company Secretary Uwaboy Agbebaku noted that the growth reflects Nigerian breweries' resilience in a tough economic climate driven by premium brand performance, cost management, and stronger market strategies. He added that operating profit improved significantly while net profit surged by 157%, supported by reduced finance costs and gains from the company's 2024 rights issue program. Although the third quarter saw a mild slowdown due to market seasonality and an impairment linked to the integration of Distilled Wines and Spirits Nigeria Limited, the board remains optimistic about a rebound in the final quarter driven by festive season demand. Nigerian Breweries also appreciated its shareholders for their continued trust and support as it looks ahead to a stronger finish for 2025. The Coca-Cola company has reported a $393 million impairment charge following the sale of Chi Limited, makers of Hollandia and Chivita, to UAC Nigeria PLC. The charge disclosed in Coca-Cola's Q3 2025 financial statements marks the company's exit from Nigeria's juice and dairy market after 6 years of direct operations. Coca-Cola had acquired full ownership of Chi Limited in 2019, spending about $694 million in total since its initial investment in 2016. The sale price to UAC Nigeria was not disclosed, but the impairment shows the deal was below the asset's book value. This move forms part of Coca-Cola's global portfolio simplification and follows plans to take an additional $1 billion charge from the partial sale of its African bottling stake. Meanwhile, UAC Nigeria PLC is expected to provide more details of the Chi acquisition in its upcoming Q3 report. Stanbic IBTC Capital acted as the lead financial advisor on the transaction. Guinness Nigeria PLC has posted a major financial comeback, recording a pre-tax profit of 15.8 billion naira for the quarter ended September 30, 2025, a massive 315% jump from last year's 3.8 billion naira. The brewer's 15-month earnings also surged to 43.7 billion naira, reversing a 73.6 billion naira loss in the previous period. The strong recovery was driven by revenue growth, cost efficiency, and improved brand performance across its beer and spirits portfolio. Quarterly revenue rose by nearly 65% to 98 billion naira, while operating profit more than doubled to 16.4 billion naira, despite higher marketing and distribution expenses. On the balance sheet, shareholders' equity climbed to 28.4 billion naira, reflecting stronger financial stability and reduced retained losses. Guinness shares have soared over 160% this year, underscoring renewed investors' confidence and a solid return to profitability for the brewer. Capital Sage Holdings has announced the appointment of Nas Ude as Group Chief Executive Officer of Capital Sage Technology Limited, its financial services arm. The move marks a major step in the company's plan to accelerate digital-led financial growth across Africa. Ude will oversee subsidiaries including Kolo Money Microfinance Bank, Aircas, Rigorous Asset Management, and Tiki by Kolo Money, operating across Nigeria, Gambia, Kenya, and the UAE. With over 30 years of experience across global financial institutions such as Nova Merchant Bank, Union Bank, and Citibank, Ude is expected to drive innovation, inclusion, and regional expansion. Chairman Opeyemi Oduwole described the appointment as a new growth phase for the group, saying Ude's leadership will help deliver greater value and strengthen Capital Sage's position as a key player in Africa's financial evolution. And that's it on your brand updates for this week. Don't forget to subscribe, like, and share.